Welcome back. Well, it's the economic week that was, a whole host of data having come out as well over the past week or so. And we'll start to kick a little bit of that off. Now, perhaps starting off with some market data and exactly how the markets have performed. The retail story really seen a lot more culminating in what happened yesterday. That is Thursday. The likes of Woolworths and Mr. Price not having a great day at all. Those share prices falling as much as 10% for Woolworths as well, just yesterday following a trading update from the company, which didn't help the company of sorts. And as you can tell, the Australia business not doing too well. Their food sector was, of course, their big money spinner, but things have been in a damper situation considering just South Africa's growth levels, consumer appetite. And let's also not forget that in November, a lot of the sales when it comes to Black Friday do not necessarily go to food retailers, but a lot more to the high-end market of the spectrum. So too is Mr. Price, a complete struggle on their end as well. Around 16% or so lost with regards to market trade yesterday. So it is a big struggle for them. On the whole, those two companies having struggled as well there. As you can see, Mr. Price's share price falling down from around 259 Rand a share right the way down to just below 220 Rand a share. Nearly 17% lost just for Mr. Price alone yesterday. So that picture is really not too good. It was pretty steady all across the board, but I think the 200 Rand mark would be a territory that they would not like to pass at any point in time. Perhaps a recovery is necessary and necessitated and rather brought by the fact that consumers may begin to pick up again as the year goes through in earnest. More economic data having come out, and specifically having regard for retailers. We saw retail sales numbers come out, a gain of around 3.1%, led a lot by furniture retailers, but also there was general dealers which saw a 1.6 percentage point contribution to that 3.1% rise there in retail sales for November. Retailers in the likes of textiles, clothing, footwear, and even leather goods, as well, as you can tell, they're going up 0.7 percentage points, and that's the kind of contribution they then added right through to that 3.1%. Household furniture, as I mentioned as well, going up 0.7% or adding 0.7 percentage points to the market picture of retail sales. We also got those mining production numbers, which fell, however, a damper. That is a sector of the market that we're supposed to seeing a whole host of growth. That is a big money spinner for South Africa. And let's remember that it is the backbone as well of how South Africa has fared for a number of years, falling quite dramatically. Iron ore contributing the most negative with regards to production there of around negative 2.5 percentage points added on the whole. And of course, the big news having come through yesterday, an unchanged stance with regards to the repo rate, 6.75%, the prime lending rate at 10.25%, the Reserve Bank choosing to keep things on hold. All of that economic data having come through, of course, this week, and that sets out exactly how things fare for South Africa and the economy, which in itself needs a whole host of growth, perhaps a revision with regards to that growth forecast by the South African Reserve Bank. But that is the week that was. Nzinga.